go to Chicago, Blue Line Futures, Oliver Slope. Well, not much to be real excited about if you're wanting the market to move higher.
Yeah, well, I would challenge that. I would say it is exciting to see corn, hardly changed on the day after just a bloodbath in a lot of these outside markets. We obviously saw a sharply lower open last night on the back of the announcement of tariffs, which was largely, I think, digested by market participants as worse than the worst case scenario. I think the best case scenario would have been a blanket 10%, and the worst case was a blanket 20%, and it was worse than that. And you're obviously seeing the outside markets affected there, but the fact that corn's able to stabilize, I think, is encouraging. And I think a lot of that is because Mexico and Canada were left off the list, which Mexico's primary buyer of U.S. corn. So a little bit of isolation there. Soybeans, unfortunately, a little bit more headwinds with regards to tariffs on China. The fact that we printed a low within the first 5 minutes of last night's trade, I guess, would be encouraging. I'm still optimistic on the November contract, so long as we can hold that psychologically significant $10 level. And then moving over to wheat, I think there's something to be excited about on that front as well. A risk-off trade in the outside markets potentially starts to tighten up some risk parameters for money managers, and money managers have been aggressively short wheat for really what seems like a lifetime. And then on top of that, we're not that far removed from the USDA report that we just had, which was also fairly friendly wheat. We've got weakness in the U.S. dollar. Potentially that would be a tailwind there. So there's a few silver linings out there. We just got to make it through these first few days of the knee-jerk reaction following the tariff announcements.
And you mentioned USDA reports right around the corner. We get another World Ag Supply Demand Estimate, or WASDE report.
Yeah, that's right. So we got to keep those pencils sharp. And I think, anytime you get a big outside market event like this, it's almost like a rubber band. And you eventually, you find some sort of middle ground and consolidation. I don't think we're there yet. Potentially, we got to get into next week, but we'll get there sooner than a lot of people think. And hopefully there'll be some green shoots to come out of it. All
right. Let's touch on this before we take the break, and that's the crude oil market. And just yesterday, we were looking at $72 crude, and here we are today, 67. That's quite a sell-off.
A huge sell-off. We haven't seen a move like that in the crude oil market for some time. And again, a lot of this is on the back of the tariff announcement that was worse than what people thought was the worst-case scenario. So you start to get these major concerns over not just economic growth, the United States slowing and a potential recession looming on that end, but the global growth is really what the big concern is there. So if these tariffs aren't walked back or watered down to some extent here in the near future, I wouldn't be surprised to see the pressure continue to be put on crude oil going forward.
All right, Oliver, hang on. We'll come back. We'll talk about the stuff we really like to talk about. That's the proteins. Yep, steaks, loins, bacon, it's all there. Market Day Report continues in a moment. Let's go back to Chicago. Oliver Slope, Blue Line Futures, proteins. What do you pick from this?
Well, big gap lower. I think there's a few different things at play when you look at the weakness that we're seeing in the cattle market. Again, the risk-off trade in the outside markets is kind of been moving money around a lot of different asset classes throughout today's trade, and you're seeing that long liquidation take place in the cattle complex. And I think there's probably a deeper fundamental reason behind that as well, besides just tightening up risk parameters from managed money. I think, as we mentioned in the crude oil market, you've got concerns over slower global growth and a potential recession in the U.S. Not to say that has to happen or is going to happen, but the probability has certainly increased over the last 24 hours of that. And if we do have a slower economy in the United States, I think people are going to start thinking twice about what they're getting at the grocery store, and that certainly raises some concern. So from a money manager's perspective, if you're looking for a weaker consumer, I don't think that you really want to be overly aggressive. The cattle complex, which the funds have really enjoyed a nice position there for some time on the net long position.
All right, quickly before we go, let's talk gold. What's happening there?
Gold initially spiked higher last night, made new contract highs, reversed, sold off sharply this morning, and has kind of found a middle ground. The gold has been kind of a safe haven asset over the last several weeks, but you're kind of getting the throw the baby out with the bathwater type of reaction today, where it's sell everything, sell first and ask questions later. And unfortunately, there's some weakness in the gold market. It was a little bit overdone to the upside, so I wouldn't be surprised to see some additional profit taking in the gold market. But eventually, I think that we'll come into a little bit of a value zone if we can trade a little bit lower from here.
All right, Oliver, always great to see you. Oliver Slopes with Blue Line Futures here on a Thursday as we're headed to the